Mic check. We're good to go. What's going on, everyone? This is Jordan with Conquer Trading and Investing. If you're new here, welcome. If you're not, welcome back. Remember that old live public stream intro. Here we are again, everyone. Happy Wednesday. Happy to be here with all of you. Grateful for everything that's going on. Looking forward to today's session. I hope you're all well. Good afternoon, good evening, wherever you are in the world right now. So glad that we are here together to spend this time together. That's right, K2 Talker. God is good. It was, we have, by the way, today, it's ready to go right after this session. I'm going to go ahead and in the Discord, in the BitFinX, make sure that I go ahead and get you this link. I'll put it here in the live stream. We have Big Cheesy's presentation on the BitFinX whale update part 2. And he told me back in the day, I used to talk about God a lot, and that I don't anymore in our CT&I only live streams. I didn't mean that. That's not intentional. But anyway, just to let you know, I'm always thinking of him, and I'm just doing my best to do what we need to do to stay focused over here and truly, right, conquer the markets. To do that, you have to conquer thyself, right? Salamando, my brother, we're time to get into it. We got to talk about and make sure everyone's clear what's going on with the black diamonds, double black diamonds. I will make sure to do that with clarity today, for sure. We got a large echo in here, Fabio. Oh, 2 tabs open. There you go, my brother. All right. So this is a pretty big deal that we're looking at on the DXY. We are looking at the DXY breaking down below this sell impulse, the green line over here. Now, a couple of things, right? It's just like on the verge of piercing through. It needs some follow through, right? It could still close above here. It could wick above here on the daily close. We haven't seen any follow through yet, but this is potentially happening, and it's potentially happening at a time off of the CPI print, right? Why? CPI came in hot. Yeah, sure did, but most likely the next couple may not. How'd you like that wording? That's not fair. Most likely the next two probably will not. Well, we have no idea, do we? The next 2 are very important. We have 2 more CPI prints before we have the live March FOMC meeting to find out whether or not they're going to hike rates or not. Today, it appears we're seeing bond yields come off, the 10-year down 1.6%, the dollar selling off, and we're seeing stocks rally. It seems to be that the market is saying, wait a second, maybe this is not really putting so much pressure on the Fed. And again, that's why here we don't know what's going on. For real. I don't know if they're able to wind down the taper, if they raise rates, if they pause, or if they come in with a new QE injection. It's only January. It's like the first week of January. We need some more time here before we can make better, educated, calculated decisions. We are right now have that open posture, and we're following what's going on over here, following what's going on right on the charts. And this is a big deal, seeing the DXY potentially break down. If we get some follow through, that's going to help Bitcoin put a little bit of a bid under it. I want to look at that from multiple angles. By the way, this is one that we've been looking on the risk off chart. And I have this trend line over here, which has been showing the touches we've been putting down lately over here. You could see resistance back in November. And then you could see even before we found our footing over here right before or in August of 2020, right? And we saw that little consolidation, and we lost that level, and then price went straight down into the sell impulse. I want to jump back over here. It's the same line. It's the same line showing the different, structure of the market, right? There it is right there. And the reason I bring that up is because we have another little bit of support right below it. You could see this touch over here in September 2020. Again, another touch November 2020, and then resistance in August of 2021. So that, again, sell impulse for now. We're not out of the woods. Get below this area over here, and then it looks like that we have the potential for a much bigger follow through. So what I'm saying is, well, good news today, right? Right? But no need to get too excited just yet. How about cautiously optimistic is the phrase of the day. Nothing more than cautiously optimistic. And what do I mean by that going further, right? Well, we had a nice black diamond entry, right? Boom. This was lined up for all of us right before getting off of the live stream yesterday. And then it was put out on Twitter right before, well before entry last night, just to make those that are following understood that if you're taking this entry, your stop loss from the double black diamond is now moved to break even. What do you do by doing that? Well, instead of taking on more risk, because, and I just want to reiterate one more time, it's the same risk per trade. It's the same stop loss per trade. The stop loss is the wick of the low of the move. So on the black diamond entry, that's your stop loss. If you're risking, to keep the math easy, 1%, right? That your position size is variable depending on how far away the stop loss is. Now, if that trade is taken and then you go ahead and you take the next entry over here, stop loss is moved to break even on the double black diamond, right? And now you're taking another trade with the same stop loss down at, oh, whoa, did you see all that business? At the wick, the low of the wick, and it's also 1%. So you're not actually increasing risk. You are increasing your potential profitability. Well, how are you not increasing risk? Because if price falls over here, if price falls below the double black diamond entry and comes out, it's going to take out your stop loss of your double black diamond entry, right? And you still have that same 1% risk on, whether or not it gets hit or whether or not the trade works out. And that goes further as we get closer here to the conservative entry, the green line, right? At the green line, if you take this entry, next bit of resistance, by the way, is not really the green line. It's over here horizontally. Do you see over here? Follow the mouse. It's showing these touches right here in December, again in December, and then all the way throughout the end of December and into January. So, coming into that area, that's when this trade, if we're able to make it that far, that's when this trade stop loss moved to break even. And at that point, you've reduced your risk down to zero. You've increased your position size, and then we'll see whether or not we get the breakout over here. On a breakout of this trade over on the conservative entry, stop loss is still down over here. So your position size is much lower, much less, but it's still that 1% risk. All right. So again, we always do that in real time whenever we have the opportunity, whenever we have the entries. And it's a little bit easier right now to see why, taking those black diamonds, double black diamonds, getting stopped out. I took another one recently. The last one I took, right, was over here. I had taken a double black diamond that was somewhere around middle of December, and it took a while, but it got stopped out, right? That's a 1% loss, right? You could see now, I'm not saying this one's going to catch hold, but if this one does, you could see really quickly why it's worth taking those little losses until a trade gets going and finds its footing. All right, moving forward, because we're always moving forward, right? Look, a little bit of caution. We talked about this yesterday in the live stream when we looked at that research report through the NYDIG that a good friend had shared over with us, made sure that we had privy to that report, as well as, most importantly, potentially the changing cycle behavior that we are witnessing. And the last two CPI prints came in hot, and Bitcoin traded up on those reports and then later faded those moves. That could potentially happen today. I don't want anyone to get FOMO and too excited, right? We are not out of the woods by any means. Now, for sure, what we're seeing over here with the dollar hitting that sell impulse, that is cause for belief that we might be really in for a trend change over here. And again, the way that I read or what's going on is that probably, I don't have a crystal ball, and I'm for sure, like, sometimes I get it, other times I don't, that the next coming CPI prints will be a little bit more, let's say, in line. You could check out, and you should be following the work that Lynn Alden continues to put out there. She's all over that macro, as always. Quick question before we get going. Thank you, Marcos. If we're light here on CTM only, 160 people viewing this live, so lots of love to all those on the replay. If you are here, though, let's make it count. Let's make sure that you smash the like button and keep us going over here. I appreciate that very much. If we take the conservative entry at the green line, do we move the stop loss from the red? No, I don't. That's a great question, by the way. So the question, this is actually a great question. And hey, listen, you can. The question is, I took this entry over here, right? And we came into the resistance, and I moved my stop loss to break even. Now, if I'm able to move towards the next bit of resistance, horizontal right around there, and I move this entry, that just happened twice today. If I move this entry to break even, do I go ahead and move this one up over here? Well, I said I don't, but if you were doing that, hey, I support you all day long. That's for you to decide if you want to do that or not. You obviously are able, because by doing that, by the way, you've then reduced your risk down to nothing. Because if you, that's a 1% move, that's almost the same distance, right? Almost the same distance. Let's call it the same. That's a 1% move. If you come back down there and get stopped out, right? Even if this trade now, you have all the way down over here is that 1% risk. So you've made yourself a free trade on the break of the conservative entry. If you want to do that, I think that's smart. I think that's good and that's calculated. I don't do it, but I'm not telling you that you shouldn't. All right, that's a really, 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 really sweet question over there, Ying. Good stuff. So I took the entry on the ES. We'll get to the ES in 1 second. So I'm Lego Man, I'm just gonna highlight that once again, right? So there you go, John. It's strong resistance over here. Whether it's 46,000, which I'm looking at the green line. All right, why? All right, let's take a look at it. Well, before we get there, John, because it's a great, segue. But 1 second. We are today on the move, on the break of that trend line, which is a black diamond trend line over here. We are moving from red to cautious to yellow. We're not out of the woods. I think that's the exact terminology West used earlier in his morning wrap up and morning summary. We're not out of the woods. In order for us to go green, we're looking for a break over here of this line. This is a blue line, but it is the green trend line that we're looking at when we look at, well, I'll look at it at a different vantage point in 1 second. It's that green line right over here. Okay. So let me keep going. The reason I just have it that blue one is because that's what I've used as major breaks, right? So anyway, we are yellow. We are cautious. You could be cautiously optimistic. I'm cautiously optimistic. I tend to be someone who looks on the bright side of things, and nice to get out of the red, but not out of the woods by any means. And you could look at that from, and just so everyone's on the same page, breaking above, right? This trend line over here, the outer trend line, that will definitely set us into a green zone where the buyers have once again regained control. Here's that green line right there. Another look at it. And you've seen it over here shared yesterday, the channel we're in. Here's that green line. It's the same line over here from multiple angles. Once we break above here, then the buyers are in control. The buyers are not in control right now by any means. The sellers are still in control. Only we've just made a break. So now we're looking at a cautious area, a yellow area. I will continue to consult and watch for what happens if we're able to break above. So $46,000, right? So you could look at $46,000. That's coming in right around right here where we would be looking at a break of the green line. That's variable though, right? So maybe you have a lot of traders who focus on that horizontal resistance. Is that coming in at 46? Right? Not really. A little bit lower, right? So 46 is kind of, well, it's a good rough estimate from where we are today. But if it takes us a while to break across, that line will be lower. that line will be lower. And more important than just the static number like 46, it's just looking at the trend line, right? That's what's important. Let me just tighten that up. All right. So, look, if we're able to make it past, we'll call it 46 or the conservative line, and then we get some follow through, I will continue consulting this line, this area of danger zone. Now that we've made a lower low, right? Have we made a lower low than the peak over here? I should tighten that up a little. So I will probably and hopefully before tomorrow's session, just to make sure that that box is exactly where I want it. Is this playing out or something? Potentially, who knows? We never know. We want to be aware of everything. I talked about yesterday that, you shouldn't be looking to sell down over here. Now, if you were bearish on Bitcoin, you have an opportunity where you're seeing the Bitcoin is finally becoming overbought in this current downtrend that we're in. And we're in a downtrend. And you could even see, like, looking at the resistance, that's the green line, that's the conservative entry. That's resistance. We're coming towards resistance. You could see not just the trend line resistance where my mouse is to the left. You could see where we talked about moving the stop loss to break even. It's also horizontal resistance, right? This is a sell zone over here. And if you were looking to line that up, because you're like, for me, well, I don't need to be any clearer about the way that I look to go ahead and slay the beast. But if you are looking to play both sides more actively, now you're lining up a potential trade to the short side. You'd be looking for perhaps a break of this trend line, and probably that break of that trend line would be coinciding with the true trend over here on the 2 hour. This is on the true trend, not BTC true trend, going negative at the same time. That would be a play. They're going to happen at the same time, I bet you, if it happens. And that would be a place you could potentially look to short for the downside. A lot of people were looking after the breakdown, right? Why price was overbought to begin selling to accumulate that Bitcoin. I just want everyone to be careful, right? How did you come out with the danger zone? So we should fix it right now then really quick. The danger zone is going back over here and looking at, this bounce, right? During the last bear market. It's up towards the 0.382 fib. You could go ahead and just tidy it up now. What I do is I do it off the close and I do it off the wick, right? So this is off the close and then off the wick, and that's how I get both ends of the zone. So let's see. If we put this down to the low print, right? So you can see the box coming down a little bit more, right? No, that's not right. Oh, what am I doing? Hold on, I'm gonna try one more time. There you go. See, that came down just a little bit to the 0.382. I'm gonna just go ahead and finick it down right there. And then I'm just going to go over the close 1 second. And I'm going to go ahead and make sure that's adjusted correctly. And that is really close now like this. So the danger zone has got a little bit small. That's the area I'm watching, right? And just this is for visual purposes, nothing more. Let me just go ahead and make that nice and neat like that. I don't know if we get a test of the danger zone, if that occurs anywhere near this fractal. This fractal is just to kind of give us a visual of what potentially that could look like. It's not a question of when or the exact timing of the fractal so much as it's trying to illustrate a retest of that danger zone. Now, I don't think by looking at this fractal that I think that we're going to get rejected here and come back down. I do think that if we're able to test the danger zone, I want to be looking and very acutely aware of what a technical breakdown would look like at that particular point. And if price broke down from it after testing the danger zone, that would be, hey, CTM, if anyone been pushing any type of like positions coming off of, like, let's just say this went as far as, this is just like trying to get you to like see where I'm thinking. If price came up to here and then broke down and we had a technical breakdown, whatever it was, you might want to take profits from all these trades and get neutral again, because we could be under a bit of a pressure. And it doesn't mean that we won't or can't like test in the danger zone, come down further, break this trend line, and then be under massive pressure. It could all happen. So again, not trying to confuse, just showing the awareness of a level that would be pretty, let's say, sensitive for us to make sure we're able to clear through there without any type of technical breakdown. Yeah, I agree. So, Jonathan, sometimes you could be keenly aware of what's happening and it's still hard to execute. That's awesome insight right there. That's awesome. That's really, Jonathan, you have no idea. Just because even that, like, it's one thing not to be aware and to be out there blind and bumping around and guessing. It's another thing to be aware, and then it's another thing to be able to be aware and execute correctly. There's nothing easy about it. That's why we put the work in each and every day to do our best. To do our best. And yeah, and for sure, everyone watch Jesse's work and Jesse's continued insight to what he's watching, and use that as a vantage point to help you figure out what you're looking for. I highly suggest that. Dave, it's Hump Wednesday, my brother. Good to see you jumping in here, even if it's just for a moment. And there you go. So, not all exchanges made a lower low. Blah, 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 blah. Let's keep going. Let's find out where we're going. I know we wanted to talk a little bit about the ES, right? Lego Man, he took a nice entry at 46,070. Here you go. 40. Let me jump down to the 2 hour, right? 46,007. I'm gonna like say right around there, right above that resistance. Maybe he got it off of here. I'm not sure, Lego Man, how exactly you did it. It's in this area. Would you say it's a good take profit range? I always struggle, right? So listen, after the CPI this morning, you saw equity markets, specifically the Nasdaq, rising up, right? Let me jump over to the 2 hour on the Nasdaq, and then you saw the shakeout. There was the shakeout bar right over here, and right now price is trying to figure out if it's going to be able to resume up or come back down. Lego Man, this is what I would be thinking if I were you, knowing we just had a shakeout to the downside. You didn't get shooken out of the trade and you're still in it. I think that whether you use the low of that wick or the low of that wick over there, it's pretty close, right? But either one, I mean, that's where I would be looking to put my stop loss in. That leaves you in profit on a stop out, right? Nice trade. And the opportunity here, as we're seeing a potential big shift happening in the markets today. Big shift is a big macro high impact news event, the CPI. And then you're seeing the dollar break down over here, yields falling. It all seems so far, again, hey, will it be faded again? But it also, so far, it seems like a move that has potential to hold. So instead of letting go, when you have all those factors go with you, I personally would be putting in the stop right in the area we spoke about and why, and seeing if you get, are able to push this thing here, right? So that's a way to view it. I hope it's helpful in helping you firm up your own. Boom, 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 boom. Alejandro, love the support of everyone for everyone. That is how it's done. Right there. CTM principles all day long. No question about it. Right? What else? Jordan, we can be optimistic and follow what we think's happening, but prepared for every outcome. That's just it right over there, right? And that's the truth right over here. Only execution is all that matters. We have some nice trend lines over. I want to take a look. Dean, go ahead and share this trend line over here. This is what I'm attracted to is the March low. My trend line that I always use was a little bit different, right? You remember? Let me just talk about what I'm talking about as I talk about it with y'all. How about that? Let me just come over to the daily time frame with you. And then, right? So I was looking at something like this. This is the trend line that I used. If you were here on CTM, if you were at CTM when we first started here in late October, November 2019, this was the trend line right, that I used coming out of the bear market until we broke down over here during the dollar liquidity crisis in March 2020. And then let me just try to get a little bit bigger. This is the trend line that I would use over here until we were able to until we broke over here during the liquidity crisis. And then, I worked our way up until we got back above it, right? Now, the way that Dean is lining that up appears to be different because he's using the March touch, and then the March touch over here is showing that we came back into it around September and October, right? So I'm just trying to figure this out in real time. This is September and October. So the way that I had this trend line is it way off now from the structure the market's showing us. So here's a look at it. I'm going to zoom in over here so you can see what's going on. This is the same trend line he's showing, prime trend line, again, from that low, the low of the March 2020, and then the touches that we saw in September, October, different than the way that I always viewed it. I always looked at this as an anomaly because of the liquidity crisis, and I kept this trend line in there. So looking now to see if I need to revamp my game over here. And then he's showing over here, I can see the touches going back over here into 2019, resistance then, right? So you can see this, look again, resistance, flipped into support briefly. Look over the symmetry, the structure of the market. It makes sense, which is why I'm paying attention to it, right? And then I wonder, right? You can see over here, beautiful touches, beautiful touches, beautiful touches, right? Cloned right here, touches right there. And then this one is a one touch moving upwards. Hear him zoom in over here, see what he's looking at and showing. I think it was named Last Hope. This area, Last Hope, between the green box is going to be right over there, saying that's an area if we're trading down that we would like to see hold. Very similar, but very more clean, or very more, I wanted to say very more accurate. Nice English, Jordan, right? To kind of like the area of the box that I eyeball this. I did this out of intuition and feeling, right? And then you could see Dean over here showing with some accuracy and market structure potentially why I think it's fair to say that that box could be then pulled down one further, right? Let me just, there's no, yeah, that's resistance, that could be support down over there, that would take out some stops over here. That would be ugly, but I could see that occurring potentially. So good stuff over here. And I just wonder, looking at this vantage point, I don't know, does anyone know what candles we're on here? Are these monthly candles that we're looking at? Right? I don't know. But what I'm noticing is the touch of the top of the 2013, and then the trend line showing the low of the bear market that we came back in and touched in that March 2020. And because we touched the bottom of the 2000, this is different than Dean's then. Because then Dean shows, and this is, I have a feeling on linear, and this, by the way, on log, and I was wondering if that touch of that March 2020 right over here, boom, right over here, touch of the March 2020, you can see how he touches then in September and October. That's not happening on this one over here, but this looks at the same time like a pretty important trend line and structure of the market. And then again, you can see this trend line over there. Is that the same line over there? Anyway, I'm playing with this stuff, trying to figure out what exactly we want to focus most acutely on going forward. Did I lose you all? Are you all with me? You got the the comments are going. Weekly, maybe? There you go. On log, connect the trend line from the August 2015. Wes, you do it. We'll look at it again tomorrow, right? For sure. And then this I want to release to all of you. This is part 2. Jose, all right. I want to make sure that we release this over here. What is going on? Welcome. By the way, welcome. I'm so glad that you're here. It's good that you're here. I know that you just joined CTM, and I'm glad to have you here with us. I really highly recommend going back and watching the Bitcoin playlist on the lines of repair, because it's going to walk you through everything that we did together in real time throughout this whole period. and that is going to help you. Like with today's video this morning, as we start going over what, again, we use real-time experiences to do real-time execution and showing how we played this series over here. We could only do it on days we have entries, right? That's its only opportunity as the market in real time is giving us the lessons. That's how we go over it together. Awesome, James. Thank you. There you go, James. And I wish I could condense it better, right? I wish that I could make the information like much more easily accessible, where it's like 1, 2, 3, 4, but it's really a lot more nuanced than that. And that's why we do what we do together each and every day. Is that a round and bottom? Could be. I'm cautiously optimistic. We are right now in an area where we've gotten yellow. It's nice to get out of the red, but at the same time, we could definitely see this thing turn on its face. Let's make sure that no one gets into any type of FOMO situation and chases the move. We're preemptive of moves, double black diamond, black diamond. We're not looking as price rises to be like, oh, it's getting away from me. I'm going to go ahead and enter. Right? So cautiously optimistic over here. We're still under pressure. We're in a cautious area, waiting for clarity in that yellow. Last time we didn't make it out. Here's a break of the green, perfect example. Here's a break of the trend line, and then we came in and we were rejected. Now this trend line wasn't here at the time. This trend line, I'm going to just make it a little bit bolder. It wasn't there at the time, right? Because there's nothing there, and it looked like we were breaking out. Big Cheesy actually in that presentation on the Bitfinex is going to explain what was happening there, and it looked like we were seeing also going from the buy and sell contracts, also a breakout happening, and then that was quickly rejected. Now we have that as a guide going forward, and that will offer us the next bit of resistance we need to get above in order to actually have those clearer skies, and I think it's easily visualized right over here. Right? This is the channel that we're currently in. By the way, Dean was able to go ahead and narrow that down a little bit lesser, right? It's a different angle, actually, right? So Dean, the pause in the voice is because, well, I see the touch here, you got above it, came back down at the support, failed here, and after falling, resistance, resistance, resistance. This is the fake breakout that we're going to talk about with Big Cheesy as well over here. And then again, this is resistance. And that line is a perfect touch of that resistance right there, right? Is that line, by the way, if you were coming to it today, that's a little bit above 46. So that's interesting, right? And then you can see over here the touches of support and then again a support. So these two lines, I would like to just add onto the chart we're watching in real time, just so we could, because there's a bit of a difference between coming into where I'm looking at my conservative resistance right around 46 and where these two lines would put you. These two lines would put it a little bit higher, right? It looks more like closer to 47 and a half, 48. So that's something to be aware of. You know me, I just want to know what's right. That's all that I care about. Each time we spend a few weeks under the 21 EMA, we get strong support area and strong let's up, right? Charts in private chat. We really need to break the 21 weekly EMA in a couple of 2 to 4 weeks. I do much better when I only stick to CTM. So there's a lot of noise out there. So much confusion out there. There you go. Have we decided that the 4-year cycle is in fact dead? Nope. Let's talk about that right now, Kathy. That's a great segue into there. Before we get there, a good linear trend line is correct. Connect April. Wes, could you put that visually for me and send it to me? And then we could talk about it in addition to what we're looking at here tomorrow. Because anytime I try to do that myself, you all know that in real time, it's not good. Awesome, Jose. So Kathy is asking, and I need to pull up a chart as we talk about it. So I'm going to pull up this chart, I guess. All right. Kathy is saying, hey, listen, right? Have we decided that the 4-year cycle is in fact dead? Kathy, we haven't. I'm sorry. I wish I could give you the easy answer and say that it is or it isn't. And if we saw in this quarter a massive like move up, it might seemingly come out of nowhere. But if you look at, all the locked up supply of Bitcoin, this whole move down, it's been right here. Let me pull it up and talk to you about all this stuff that's happening. All right. So I don't want to lose anything. I could get this one off. All right, let me just start like this because it's a very good conversation that we need to have. Right? Matt believe it isn't. I am like, well, undecided. The market has to prove itself to me. I do believe that potentially, right? So you're seeing over here, look, as price has done this dance. This is the April high, right? And then the July low into the October, November highs, and then the pullback. This whole time, you're looking at the liquid supply shock. You're looking at the supply of Bitcoin being locked up, locked up, locked up, locked up, locked up. This could contribute, in my opinion, to like all of a sudden something breaks and then price shoots the gap, shoots upwards, right? And you could see something like Blake has been pointing out, right? Like you could see like, boom. I can't say that the 4-year cycle is dead so much as like, has there been a longer few month like consolidation, and for what reason? I don't know. How about that? Kathy, I'm seeing and watching this potential changing structure of the market. You can see the research we showed yesterday showing that, if you're looking on chain in a lot of different aspects, we could see a changing behavior. We normally see the cycle peak in the end of every 4 years in that fourth quarter, and on chain is showing, well, from many different angles, that didn't look like the top of the cycle, right? So is the 4-year cycle dead in that aspect? Well, sure, the cycle didn't peak, whether it was November 30th or into December, towards the end of the year, after making that after making the mid-cycle low in the July the year after having, in every cycle but this current one, it had peaked. Now, so some people are thinking that it's peaked, and well, maybe they're right. I can't say that in real time. To me, everything that I'm seeing does not lead me to believe that we've peaked up over here, right? Now, so Kathy, you hear the hesitation in the voice? Like, we don't know. I don't know. And to me, it really seems like that 4-year behavioral of the 4-year cycle, although it's definitely showing different characteristics, is very much still in play. It's very much still in play. And at the same time, and part of the reason we're even looking at this map right here of the momentum is because if the current nature of the cycles are changing, as they're changing, by the way, we're still looking at potentially wave 1, only wave 2 now is much bigger, right? So are we going to come up and put up the move up, or are we going to like entering this mini bear market, and then we move into another mini bull market, right? That only lasts, 6 months or so. It's a rough estimate, and then put back into another bear market. And that whole time, are we just doing this dance, still making that year over year gain? Or are we going to actually come out of this mini bear market and then put in a massive move to overvalued prices on Bitcoin? I don't know which occurs. And I said, if we did not peak here, right, wave 1, wave 2, holding this line and move up, at that point, I would be following exactly what's happening on price. So these cycles can still be cycles without I do believe that we are looking at natures within, even as we move forward towards perhaps I just need to visual person. I need to be talking about it. as you know, even if we're moving towards something like this, right, which I sincerely believe is what's happening, I still believe the nature or aspects of the 4-year cycle are going to play out within over here, including, right, the 2024 halving not being priced in. It's going to have an effect on the market. And at the same time, you all know we're looking at those different and changing characteristics. Public miners in the US who are following MicroStrategy of holding on to their Bitcoin, right? So you're seeing less selling pressure, and that is changing the dynamics of the market, as do institutions. By the way, institutions also selling in December is changing the dynamic of the market, right? And, you know, that's it. I don't know that either. I don't know whether or not we see diminishing returns or increased returns. Or I don't know. You know, and that's why I'm just going to follow. I'm kind of, my posture is very open. I'm just going to get it right. I just want to get it right. How about that? I just want to get it right. I don't know what's happening. And as we get more clues, more breadcrumbs, we'll do our best to piece it all together. And I think that's what we're doing and been doing and have shown an exemplary example, if those two words even go together, of what that looked like over the last 6 weeks, 7 weeks, as over here in real time, we saw and have been watching and talking about the changing characteristics and aspects, putting it all together, including when, like, we had major technical breakdowns and making sure we say, hey, that's not right again. Hey, that's not right. Hey, that's not right. And, you know, is this the beginning of getting ourselves back into a position of power? Hopefully there's follow through. I don't know that there is yet. We're not out of the woods. No, I wouldn't. TJ, great question. I would not be selling my spot Bitcoin if wave 3 happens with a lower peak than $100,000. And the reason because of that, TJ, is because if that were to happen, if we experience drastically diminishing returns, $160,000 was diminishing returns with a factor of 1/3 the magnitude of the previous cycle. Because the 2017 cycle had a 1/3 the magnitude of the 2013 cycle. So if you do 1/3 again, you're looking at $160,000. So if you're looking at $100,000 Bitcoin, I don't think we're experiencing drastically diminishing returns. I think we're looking at a changing nature and behavior of the market, mainly because of the participants, and therefore I don't think we're going to have an 85% drawdown from that lower target, TJ. So I would not be looking to sell my Bitcoin, understanding that we're not in for a substantial 80-85% drawdown. And also, I do believe if that were to occur, that the bear market would be what we'll call it a mini bear that would follow. I don't think that we would be looking at that long, grueling duration, because we would not need two things: the magnitude to the downside and the time and duration to repair what happened in seeing price get so drastically overvalued. If price never got drastically overvalued, you wouldn't need those other bearish consequences to the magnitude that we've experienced in the past as well. Kathy, I'm just trying to tell you, you know, I know sometimes there's not a clear direct answer, and that's because there's not a clear direct answer. Institutions need only apply Bill Miller's principles, 2-to-1 pain. Oof, love that, Andy. Right? And a lot of people right now, I've read it on Twitter. A lot of people consider this worse than this drawdown over here. I don't understand that, and I guess with Bill Miller's insight from the psychologists, because over here, you know, you had a 6x. So when you saw a 50% drawdown, this was equal to this. Over here, you had let's call it a 2x, right? So when you see a drawdown this is actually in greater magnitude to a lot of people psychologically than the move up from the July low over here. And I guess it's easier to say that, well, I'm looking from all like way down over here, you know, to up here. So the drawdown over here is great. But It's important to understand other people. There you go, Jen. This is the truth of what we're doing over here, right? This is real time. It's a market. The market is evolving. We need to not be static, but make sure that we evolve with it. And at the same time, and that's why I love the different perspectives of CTM. And I'm just going to use you as an example right now, right or wrong. Forgive me, brother, but Jesse, like, yeah, you should be following all vantage points and not be fearful of any other vantage point that's different than your own, right? You should be following all vantage points and trying to line them up and triangulate them to help form your own, right? So is it possible that we peaked out over here in November and that we are entering a bear market? Yeah, it's all possible, right? So unrealized expectations of a blow off top wrecked people's psyche. John, that's great insight. I really think that's true. And what's interesting about that is this. Yeah, I'm going to, right now, it's like as we speak, I'm just going to execute it, right, into the Biff and X Whale channel. And I tagged everyone on that, right, Chio? So you'll see that in the Biff and X Whale channel on the Discord. That's available for everyone. Wes also has those things up. Let me pull that up really quick. Let me take a breather as I pull that up. But I want to talk about, before I get into Wes, John is talking about unrealized expectation of a blow off top wrecked people's psyche. And what's really interesting about that, John, is this. Right? Let me just take this one step further. And I did this poll and I want to share it to you. What price would you sell at least 51% of your spot holding? And 51% of the people, more than half, said between $130,000 and $170,000. John, I wonder if those unrealized expectations of a blow off top wrecking people's psyche would cause people, if Bitcoin were to reach that range between 130,000 and 170,000, sell their spot Bitcoin. And I wonder if they would be selling it prematurely. I wonder if everyone has written off any type of non-diminishing returns because of what's been playing out. And I wonder, I don't have the answers. This is why I put the poll out. I wonder if those people will be making a mistake. And that's why I just want to be open. We had expectations, and we said if those expectations did not play out on time like we envisioned, and by the way, we did a great job adjusting in real time to what was happening in real time, right? So wave one, wave two, breakdown, up, take profits. We didn't get the opportunity, right? So, as the market changes, you have to be able to change with it. But I wonder if we're able to see some type of this is just Blake. I think everyone has seen this. If you haven't, it's right here in the comments. You could see that if we were to see some type of fib target in this area, a lot of people selling on the big move in before. I don't know. We'll be watching. Kathy, I lean towards that as well, potentially. I really feel like when we talk about the powers that be, I feel like for me, that's like those that are like the really early adopters that are controlling, I talk about it with Big Cheesy in the Biff and X update, but I think so. I think they are. Why don't you think the halving's priced in? Will, the only reason I don't think the halving's priced in is because you have a certain amount of public companies in the U.S. who no longer have the same incentives where they need to all the mine Bitcoin they mine, sell it to continue funding and running their operations, right? Prior to the U.S. public companies entering the space, that's what the situation was. Right. And then you could see that there's an X amount of selling pressure. And when that reward gets cut in half, there's a massive shakedown in the fundamentals of Bitcoin, causing a supply shock that sends Bitcoin shooting upwards. Now, that's a changing dynamic. So maybe we're looking at a changing structure of the market, but you still have across the world, I mean, Kazakhstan, 18% of the hash power alone, they are not public companies. They do need to sell their Bitcoin on the market to continue funding operations. So there's still X amount of the overall miners who are selling Bitcoin to fund operations, who, as that halving of the miner reward occurs in 2024, there'll be X amount of less sell pressure on the market, right? Now, take that one aspect alone with like, well, now you have a changing dynamic in the market as well. You have, and I just showed you before the supply shock we were looking at. I could just pull it back right over here, right? You have different people with different incentives, and like people aren't giving up their Bitcoin. And not only that, people like myself who had every intention of selling spot Bitcoin, well, I sell my margin Bitcoin in a second, move that over into spot to deploy other strategies. But I don't know if I want to sell my spot Bitcoin. And I think a lot of other people, unless Bitcoin becomes enormously overvalued, I'm talking from where we are today, that would be somewhere around $450,000 Bitcoin. I don't think they're really going to part with their Bitcoin. So you're seeing other changing dynamics as well. And that's that tightening of those long-term hodlers, right? So many changing dynamics. How about that? Boom, 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 boom. Oh, we had this over here. Wes, you are connecting the high of the July over here, and then the low over here of the July low. Sorry about the fading out. I want to compare that over to what's happening over here. Here's the low of the July. So you're connecting it the angle from over here, the top of July. Dean, if you're watching on this, I want you also to explore. This trend line is starting over here where my mouse is over July 2019. And it's coming up and it's connecting the low in July over here. And with that in mind, let's look at the structure. You could see over here for sure, very relevant to what occurred back in, this is August, the retest after the move out of the descending wedge, and then to where we are right now. And the perfect touch up here. Look at that, from the April high to the October high. So that's a strong look right there, Wes. Thanks for sharing that with us. I wonder, is this I'm thinking out loud. Is this more in line with my old line like this? Hold on one second. Bear with me, friends and family. It's not, right? Because this is, watch how I'm going to do it. Moving up to the July, that's not the same line I had either. It's different, right? This is the line you're looking at over here, Wes, and that connects perfectly to the structure right over there. So that's a pretty big one right there. Dean, I know you're watching this on the replay. Let me know how you're lining that up and what you think, as well as everyone else. That's a strong look over there, Wes, right? And for me, the strongest part about it is the two peaks over here lining up very well, right? So, oh, what else? Yes, the Big Cheesy video is posted. It's right now in the Bitfinex channel. You could go ahead and see it. Everyone was tagged in the Discord. And here you got the link right over there. Dale, at what point do we go with that the 4-year cycle is broken? Dale, just so I want to be as clear as possible. I believe trumping the 4-year cycle is the life cycle of new technology that we've only put together in the last couple of months. Excuse me. I believe trumping the 4-year cycle is the life cycle of new technology. You saw on Monday when we saw Bill Miller, who was talking and referencing this same exact adoption cycle and talking about whether it was electricity, locomotives, the internet, everything else that has followed this cycle. We've looked at and talked about things like technology companies like Amazon, NVIDIA, Microsoft, so on, Facebook, Google, right? Then to Alphabet, Facebook, and so on and so forth. And this trumps the 4-year cycle. This is what's happening, in my opinion. Now, throughout this, I think that we will continue to see aspects of the 4-year cycle, and it doesn't mean that it's not changing. It's changing before our very eyes. And each cycle has changed, by the way. 2017 is very different from 2013. 2020 is very different from the previous two, right? And at the same time, they all have a lot of similarities. And I think that greater signal is that throughout this time, we've seen for the last 6 years an average of 145% return. Does that continue, right? And by the way, you can see the slope of our angle. Raul was adding to the conversation after picking up on what we were looking at here when I tweeted out to Jesse, hey, Jesse, great find on finding what the fractal we were talking about, helping us distinguish the hype phase, the facing reality, and the ultimate market opportunity, the life cycle of new technology, and then tagging Raul in that. And then since Raul has done a lot of research on it, picking it up and talks about, hey, I think that we're following an upward sloping log channel. And then, he's saying that as adoption goes now from 200 million users over the next 4 years to 1 billion users, that we might see, instead of 145% year over year, 111, percent year over year. It's still getting us to the same place at the same time. So regardless of what that volatility looks like from here to here, if at any time it becomes overvalued, that's a signal to us, hey, we're looking to take more off the table. Anytime that we come down lower, hey, I'm looking to accumulate more, right? And I think that that is how we're evolving throughout this process. Gio, we all are. There you go, Jesse. Right? And it's both happening with a changing and ever evolving nature as more and more participants enter the space and the incentives change for all, right? So we're still experiencing 4-year aspects within the ultimate market opportunity, the same channel that we've been in, right? Forever. And the other way that I don't have the other vantage point, I'll have it tomorrow. I usually have it up at all times. Maybe models don't end. Maybe they just morph as our perceptions expand. Jen's getting deep as always, right? There it is right there, Dale, right? And that doesn't come from Dale. This comes from the hour that we put in every day together, right? It's not like, okay, well, 1 plus 2 equals 3. No. You're talking about an ever evolving, breathing organism here, the markets, right? And, the only way that we're able to keep on signal is to continue to make sure that we evolve with it as it happens in real time. Zach, thank you, my brother. I appreciate always using that support. Do miners have access to loans? No, miners don't. Miners have public miners, I should say, Wes. U.S. public mining companies have access to the debt markets, and that's how public companies raise money. Now, if you're talking about other miners, right, do they have access to could they use Celsius network and, lend out their Bitcoin and borrow against their Bitcoin? Definitely. Bitcoin is that pristine collateral. They were able to use that collateral, whether it's Celsius, whether it's BlockFi, Unchained Capital, or the many other participants entering into that space. For sure they can, if they wanted to. And that's also the beauty of Michael Saylor, because the way, again, a genius, the way that he engineered his trade, we'll call it, but he's also given out the playbook and ideas for a lot of other people to follow. So that not only includes public companies, but that could include a miner in Thailand who's saying, hey, wait a second, I don't have to give up my Bitcoin. As Wes is saying, I could borrow against it. All right, everyone. Thank you for today, for this Wednesday. Thank you, John. Thank you, everyone. Zach and everyone who contributes always, for helping us do what we do to stay focused and make sure that we're able to adapt and stay on the right side, right? Nice to see the dollar breaking down over here. Let's see if we get some follow through. Let's see if that holds, right? Equity markets doing their thing today, right? We were able to, everyone wrote it off. We're waiting for that big technical breakdown. We haven't gotten it, right? Instead, we lined it up. This time we did line it up, right? And the last time there was a reversal on the markets, it was too quick and too violent. So everyone, may God bless you. Greg, thank you so much. Matt, Jing, great comment earlier. Hank, everyone, thank you so much for being here. Beth, Tanya, Kathy, may God bless you all. Have a beautiful day. I'll see you all in the morning.